Hi dear students, again another session. This is actually the 5th session with you all with reference to the SL3 corporate taxation. In that, today main focus is, even the last session I have discussed little bit of this, but today the session area is taxation and business decision making. Then if I have repeated again this part with the last session with the resident company taxation, in that we have discussed little bit of this. This is again going forward of this with the company taxation question. All the details, all the background information is with the company taxation question, and the main focus is to the pilot paper, the question 3 part B. Part A we have completed, which is the computation of the balance tax liability of a resident company, which is Pinnacle PLC. The today's main focus is the rest of the part of that question, especially part B, which covers to a syllabus area of taxation and business decision making. Then when going forward with this syllabus area, it's a 10% syllabus area under 2020 curriculum. Now you may think that, okay, for this syllabus area, what are the theoretical parts we should need to study? Then for that question, the answer is the entire act. I may say it's the entire act and the other legal provisions, the gazette notifications and all. Why I have said like that? Because this is a taxation and business decision making. The main target of this, as a tax consultant, your position is a tax consultant. As a tax consultant, how you are going to give a tax opinion? That's the main thing. Tax opinion for what? Tax opinion for the patriarchal scenario given by your client. It's a simple wording if I have explained. Then if you have to give a tax opinion to your client, then in that sense, how you are going to give a tax opinion? To give tax opinion, you should have entire knowledge about the Inland Revenue Act as well as the gazette notifications and other relevant provisions. Then how in your paper this may be tested. In last week or last session, in the last week, then I have explained this is normally the taxation and business decision making coming with your 50 marks question, which is basically based on the unseen. The pre-seen has provided to you before the examination. At the examination, you will receive in unseen, which is section 2 question 3 of your paper. In that part B or part C, whatever, it is testable, maybe maximum for the 10 marks. Then under that particular situation, you should have the solid knowledge of this theoretical areas. Specifically, it is very easy for you all because it is specifically for the pre-seen or unseen information. The question is asking based on the pre-seen and unseen information. Again, I am repeating, you have prepared for this part and you are going for the examination. Then it is something you all may be the know or familiar to you all, then you can write a good answer for this part. This is again a writing of the answer. Even you like or not like, then you have to write a solid answer for this part of the paper. Now, the main focus for today is completing of the pilot paper, section 2, question 3, part B. But before that, I need to take in 20-25 minutes. I need to explain how this can become, how you all facing for different kind of scenarios in a taxation and business decision making. Before all of that, again I am taking you all through what are the key syllabus areas, the sub syllabus areas available for this 10 marks the syllabus area in your SL3 corporate taxation syllabus. We will see that. Then taxation and business decision making 10%. First one, impact of taxation of business and finance decision. Now, what is based on the taxation, what is the impact for your finance decision? I will take the example, which is my example is on the finance cost, which is the last session, which I have explained very critically with the examples. Based on that, I will explain the first part. First, listen this how we are going to give an opinion or a decision on this taxation and the business decision making area, and we will go one by one, and the final the outcome is to complete the pilot paper particular question. Okay, now impact on taxation on business and finance decision. Then we will see the example. Now this is the thing you have to, this is the way you have to think on this, because in the pilot paper, the main focus is on the enhanced capital allowances and the temporary capital allowances, the temporary concessions available. Then beyond that, I need to give these two the insights for you all to understand, okay, this type also can be testable, and I am highly highlighting you all, please go through past papers, the December 2018, June 2019 and the December 2019, the question 3, which is in your past paper with the, which is your 50 marks question. Please go through that 3 past papers and attempt to this part of the question and write your answers before the examination. It is critical with this question 2. Then the 4 types of the question you have before your examination. Now we will see impact on taxation of business and the finance decision. For an example, take this kind of example. These kind of things can be testable at the examination. Then example, now think that. Now in the finance cost, which is section 18 and section 12, now why I have taken all these things? Because for this particular 10% area, the one part of the act can be testable. Then you should know these all parts of these areas, because it is because we have to provide the opinion based on the prevailing laws. Then you should thorough about the law. Now for an example, think that particular the ABC company, ABC Private Limited, think this is ABC Private Limited. In this company, there is a negative reserves position. Now we think that share capital is rupees 100,000 and the reserves minus 300,000. Just visualize this. This is for 2019-20, which is your particular year of assessment. Then in here, which we are receiving a 200,000 of negative equity position. This is negative equity position. This is negative equity position. Negative equity position. In such a situation, if you go for the borrowings, that's the thing. Now this is the information provided to you, and the examiner is asking from you, company is going to borrow the 20 million of loan. Now the option, now the scenario is given, the company going to borrow how much? It's a 20 million of loan. For what? 20 million of loan for working capital requirement. Now examiner has given this information at the rate of the 10%. For my easy reference, I have taken the rate of 10%. Then the annual interest is the 2 million. Annual finance cost for this loan is 2 million. Now what happened? Now basically based on this information, what you can understand, it is now I have a negative, I mean the ABC Private Limited has a negative equity position. Since they are having a negative equity position, by the financing through working capital, through the long-term loan, a bank loan, there is a finance cost burden to us. Even this loan, this is working capital, since it is for the working capital requirement, it's particularly eligible to deduct under section 12. Section 12, which is under interest cost, because this is incurred for the production of income. Then that part is clear. Now my next question, can you claim this under section 18? The restriction of finance cost. Under the restriction of finance cost, even it is incurred for the production of income, eligible under section 12, under the maximum limit of the finance, the borrowing cost under the borrowing limit under section 18, can you claim this 2 million? No. No, you cannot claim that 2 million. You cannot claim this 2 million. Why? We are having a negative equity position. Then if think that ABC Private Limited is in the business of manufacturing, then if it is manufacturing, the share capital plus reserves into 3 times. Do we have that kind of a reserves or positive equity position to check this threshold? We don't. Therefore, entire borrowing cost, this is 2 million. Entire borrowing cost is disallowable expense in our tax computation. That's the first part of my explanation. First thing, in the examination, you have to understand this main picture. What is the main picture? There is a negative reserves position. Due to this negative reserves position, even this allow under section 12, but under restriction of claiming of finance cost under section 18, you are not in a position to claim this 2 million. Even it is incurred for the production of income, we are above the maximum limit of the borrowing. Our gearing is, or our borrowing is very high at the time, and our reserves, the reserves mean the retaining earnings, the profits, cumulative profits, these are in a negative position. Now first thing in the examination, you should understand what happened to the company, and you should explain. The examiner has given this part to you, given, and the option has given company is going to borrow 20 million at the rate of 10%, and the particular finance cost is 2 million per annum. You should analyze the given scenario based on the provisions of the Inland Revenue Act, and you should provide a recommendation, advice, or rather conclusion to the client. Okay, what is your advice? First you have to identify this 2 million is what? Disallowable expense. Now think, if it is disallowable expense, due to this decision, due to taking this financial decision, what is the tax burden to us? Think this company is taxing at the rate of 28%, not the small and medium enterprises, and think that this turnover is above 500,000 and not qualifying under any of the predominant sector like exports, the IT, likewise it's not coming under that categories, then visualize this is at the rate of 28%. Now think, by taking this finance decision, what is the disadvantage? Tax burden to us, additional tax burden 2 million at 28%, because the entire finance cost is going to disallow, then it is 560,000. You have to identify this. You have to tell to your client there is additional tax burden here. And finally, you have to give a conclusion or rather advise what the ABC shall do, what you all can do. As a tax consultant, one thing you can tell your client, the three things you can tell. The one is increase the share capital if possible. Increase the stated capital by issuing shares. That's the first option. And the second option, take necessary steps to the short term as well as long term, take necessary steps to enhance the profitability of the organization. This is manufacturing organization. Then maybe stock losses are there. Maybe the pricing method may be incorrect. Maybe unusual the transactions. Maybe the administration cost is very high. Then likewise, how we are going to take the strategies to enhance the reserves position. And thirdly, can we go for another thing? Other than the borrowing, can we do something on to further finance our working capital, maybe for purchases? The one of the way we need to, this is manufacturing organization, I am taking the biggest picture, then this is the manufacturing organization. In that sense, for manufacturing organization, the main burden is the payment to creditors, and we need raw materials at the time it's required. Then can we discuss with the creditors? And with the trust with us, can we request more credit period from them? Can we request more credit periods? And for the debtors, can we discuss with the debtors and can we take the money before our credit period? If it is 90 days, can we discuss with debtors and can we have the money in the 30 days period? Then these are possible, these are practical. You must more and more you must practical. Then in that, can we have another option other than going for this the borrowing facility from the bank? Can we go for other options? What are the other options? The creditor period of the settlement, can we increase with the discussion? Second one, can we obtain the cash from debtors early? Then likewise, you have to provide the decision. That's the main target on taxation and business decision making. Now, for the business decision, what is the business decision? Borrow a long-term loan. For what? For working capital requirement. As a consultant, as a tax accountant, you have to look at on this in the critical eye. Then by taking this decision, what is the tax implication to ABC Company Private Limited under the current position of the company? I think with the example and the step by step going forward, it was clear to you. This is the first part I need to explain, the first example I need to explain under the impact of taxation on business and finance decision. Okay? Then this type of things examiner can test from you. Then please go through these areas and think. It's a thinking of these things are very, very important, and refer past papers as well as the very specifically the pilot paper question, which is a very good question for the students. Okay. Then part 2, evaluate effectiveness of tax strategies proposed or implemented in business undertaking by analyzing financial statements and the other relevant information. For this part, this is a one way how it is tax effective finance decision. Now we will see how other decisions of the organization, it's what is the tax implication of the strategies or the decisions taken by the organization. Now think typical example of again ABC Private Limited, which is in the manufacturing sector for 2019-20. Okay, this is the example. In this, think there are shareholders. Think this is a family owned company. In this family owned company, there are 3 shareholders. There are 3 shareholders as Mr. X, Mr. Y and Mr. Z. These are the 3 shareholders of the company. Now, we are in manufacturing organization. Now, suddenly, Mr. Y needs to exit from the business. Mr. Y needs to exit from the business. That means now this person having 100,000 equally, or think that the number of shares 100,000, 100,000, 100,000 each, and at the number of shares and at the 10 rupees. At 10 rupees, then 1 million, 1 million, 1 million. The total stated capital is 3 million. Number of shares 300,000. Mr. X needs to exit from the business. Need to sell. What's the meaning of the exit? He needs to sell his shares and go out from the business. Now 100,000. The value is 10 rupees. The total entire value at the right now belongs to him is 1 million. Now he needs to sell this 1 million. He needs to sell this 1 million. Now examiner has provided this information to you. Now you have to advise. Now examiner is asking from you, by selling this, what are the tax implications? What are the tax implications? I am just explaining, just simplifies the question, then sell this 1 million and what are the tax implications? Meanwhile, examiner is given, now Mr. X needs to exit from the business. Why he needs to exit from the business? Private Limited is going to go for the IPO, initial public offering. Now it is private limited, but they are having intention for the go for public as a public quoted company. Then they are in the process of that. Then Mr. X is does not like for that. Then he need to exit. Now this is the information provided. Now the examiner has given, if the ABC Private Limited, if Mr. X is selling his shares, Mr. Y and Mr. Z equally going to buy Mr. Y shares, maybe at the rupees 20, both at the rupees 20, they are willing to buy. This is the selling price of these shares. If the Mr. X agrees, then selling price of these shares. These are the information provided. Or furthermore, if the examiner need to complicate it more, there is another investor who is going to pay 30 rupees. Who is going to pay 30 rupees for share, and he is also willing to come into the ABC Private Limited. This is the scenario. This is all. Now the question is, what are the tax implications to Mr. X? Sorry, Mr. Y. What are the tax implications to Mr. Y as well as for ABC Private Limited, if Mr. Y has sold the shares to sold his shares to Mr. X and Mr. Z. This is the question. Now the entirely different thing. Now how we all going to give a tax advice on this part? In my eye, the first thing I am going to capture here, this one. Now company is very recently, now all the process has done. Company is very recently try to go in for IPO. Try to go in for IPO. If it is, this is quoted public company. Then if it is a quoted public company, all the shares now, if it is go for the IPO, the public buying shares, also this Mr. X, Y, Z can buy shares. Then in the public is buying shares. Now the shares are the market in the stock exchange. What you all can think on this? What are the tax implications? First one, I will take the part of the first Mr. Y. Then in Mr. Y, if he is selling his shares now, selling shares now to Mr. Z and Mr. X, what is the tax implication to him? First one, his cost of shares 100,000 into 10 rupees, it's 1 million. Now what is this is the cost of the shares. What is the selling price of shares? It's 100,000 into 20 rupees, which is 2 million. What is the gain he is receiving from this transaction, which is 1 million again. This is the gain of 1 million. Disposal of private limited company shares. Disposal of private limited company shares. What is this? This is under the investment income of Mr. Y. This is what? The gain from realization of investment asset. Gain from realization of investment asset. Then this is at the rate of 10%. The capital gain tax he has to pay. Now think that Mr. Y has invested in now ABC Private Limited and Mr. Y has invested XYZ Private Limited and Mr. Y has invested A PLC and the B PLC. Now the investment activities of he is investing in shares. Now he is disposing one of his portfolio, then he is liable at the capital gain tax at the rate of 10% as per the first schedule to the Act. Then the second part, if the ABC Private Limited is going for the IPO, after going for IPO, the shares this is not a private shares, these are quoted publicly available shares. If it is so, think that in the same way it's a 20 rupees, he is going to sell the shares at 20 rupees, and if after IPO he is going to sell his shares, what's the tax implication? The entire 1 million is what? Exempted. Exempted as per the third schedules to Inland Revenue Act number 24 of 2017. Now see, if you have provided a correct decision, see the difference between the two decisions. One is if he sold the shares right now, then he has to incur 100,000 tax. If he can wait till for the IPO, then it's a quoted public company shares, then he is exempted. I think it's clear to you all. Now see how you are going to provide the decision to the individual taxpayer. This is because this 10% area includes the providing the decisions on personal taxation as well as the corporate taxation both. Then in my second example, that's why I have taken this, the personal taxation. Now the third point, if he has sold the shares, visualize that, then he is losing his dividend income. He is losing his dividend income, which is taxed at the rate of 14%, which is the final withholding payment. Final withholding payment to him. It is not taxing again. Then from the side of the company, Mr. X and Mr. Z need to finance, need to take their money or maybe the borrowings to buy Mr. Y shares, and the dividend at the point of distribution of dividend, the dividend distribution is only goes to Mr. X and Mr. Z from the company's perspective, because after selling these shares, Mr. Y is no more a shareholder. Mr. Y is no more a shareholder. This is again the analyzing of the business decision to individual or a resident individual, how it impacts. That's my second example with the tax strategies proposed or implement. This is going to the implement business undertaking by analyzing financial statements and other relevant information. I think that this too is clear. Likewise, you have to think properly. If the scenario has given by the examiner, you have to think, okay, if this action has taken, what are the tax implications? And finally, it's a good to go with this decision or not to go with this decision. This, the final advice recommendation you have to provide. In this, what is your recommendation? You have to tell Mr. Y, okay, if you need to sell it now, sell and pay the capital gain tax. Second one, if you wait till the IPO, then it's most benefited to you. Therefore, in my advice, it is recommended to wait till the IPO and issue the shares to the public, and after that sell your shares and go off. I think the two, take into example, I have explained the two different scenarios in the taxation and business decision making. I think it's helpful for you all. Now, with this understanding, we will going forward. Then third one in the syllabus area, evaluate potential risk in terms of direct and indirect taxes. That means income tax is a direct tax, the value added tax is the indirect tax. Then, and matters which require corrective action for statutory compliances. The fourth one, compile report with alternative course of action available for existing tax issues supported by necessary computation. This is the final outcome. All these things you have to write a report to, maybe to Mr. Y, maybe to the board of directors, maybe in a memo format. What are the tax implications by taking of this decision? And finally, the implication to the personal taxation, as I have explained. Okay, this is a syllabus area, then entire act, any provision from the entire act testable from your examination. Therefore, please have a thorough, solid knowledge on this theoretical area and be mindful, apply the theory areas to given scenario. This is the 100% application part. You have to write a solid answer by applying theory part to the given scenario, which is a practical scenario. Okay. then our main focus is pilot paper question 3 part B. Pilot paper question 3 part B. Then in that I have highlighted in the question what are the main focuses. The main focus is on the second schedule and sixth schedule to Inland Revenue Act number 24 of 2017. In my last session as well as the first introduction session in the webinar series of the revision session, I have mentioned and explained there are 6 schedules to the Act. The first schedule is for the tax rates and the second schedule is for the enhanced capital allowances and the third schedule is for the exemptions and fourth schedule is for the capital allowances, balance in allowances and the assessable charge, and fifth schedule, the last session we have looked at that, which is qualifying payments and the relief linked with the section 52, and the sixth schedule is the temporary concessions. Temporary concession. These are the 6 schedules available in the Inland Revenue Act. Now in the pilot paper, the main focus is for the 6th schedule, the temporary concession, but with that I have taken the second schedule too, because to highlight what are the differences between second schedule and what are the differences between sixth schedule. Second schedule is for the enhanced capital allowances, sixth schedule for temporary concessions including enhanced capital allowances. Okay, then that's the main focus. Second one, the second schedule. What is the second schedule? Investment incentives, enhanced capital allowances. Based on the investment, how we all, the value of the investment, how we all getting enhanced capital allowances. Now we all know about the capital allowances. It is in the section 16 of the Act as well as the schedule 4 of the Act. The based on the class of the asset and the based on number of years of the relevant to that relevant asset, according to the number of years provided, you have to compute capital allowance. What is the meaning of enhanced capital allowance? That means more than the capital allowance, tax the payer has a benefit by providing enhanced capital allowances. Now it's the second objective, and the third one, sixth schedule, temporary concessions, enhanced capital allowances. There are in the sixth schedule temporary concessions. In that, main focus is go for the enhanced capital allowances. It's a sixth schedule. Under temporary concession, it is not only enhanced capital allowances, there are research and development, and there are concessions for the IT companies. Then there are list of, and yes, these are the list. Then in that, other than the enhanced capital allowances, there are more temporary concessions available. In that, our main focus is under sixth schedule is enhanced capital allowances. Okay. Then after that, first I will go for the summarization of the second schedule. This is take in 5-10 minutes, the explaining of theoretical area of second schedule and sixth schedule, because it's very helpful for you to write the good answer for the question asked by the pilot paper. Then the second schedule, this is investment incentives. Investment incentives, in that main condition to take this investment incentive under the second schedule, there are 3 main conditions should satisfy. First one is a person who invests in Sri Lanka. The investment should be done in Sri Lanka, otherwise no investment incentives under enhanced capital allowances. The second one, other than the expansion of an existing business, very important. even the second schedule, even the sixth schedule, this is the important, very, very important criteria. You cannot invest money to invest money, you can invest money to expand it, it's your own business, it doesn't matter, but to take this benefit, but to enjoy this enhanced capital allowance benefit, you shall invest in a expansion, not the expansion of the existing business, you shall invest in the new business undertaking. Even the same company, if it is ABC Private Limited, under that, if the ABC Private Limited is under the manufacturing business, then you can start a service business, providing of services. Then it is a separate business line, not the expansion of the existing business. If it is expansion of the existing business, this you are not qualified for this enhanced capital allowance. Third one, addition to the capital allowance computed under fourth schedule, very, very important. If you have invested or if you have eligible for the enhanced capital allowances, with that capital allowance you can claim your normal capital allowances under fourth schedule. Then you will benefit by the two capital allowances. One is enhanced capital allowance and the second one is the normal capital allowance. Both you can grant it. Okay. Then that is the key points under second schedule. These are again samely applicable for your sixth schedule also. Then specific conditions, these are the specific conditions. Specific condition which is based on the investment, based on the investment. I have summarized this for your easy reference, then we will see one by one. Investment and enhanced capital allowances limitation. If you have invested in the investment criteria exceeds $3 million but does not exceed $100 million. Under that investment criteria, what is your enhanced capital allowance? It is 100%. What are the assets you should invest? Categories of assets to invest: depreciable assets, other than what? Intangible assets. What are the depreciable assets is provided the definition under the section 16 as well as the section 195. In that, the depreciable asset, for an example, depreciable asset, assets owned by the organization and utilized for the production of income. Then buildings, furniture and fittings, computers, likewise the depreciable asset. Then there are another specification for the province. What is the province? To take that 100% enhanced capital allowance on this depreciable asset, the province other than the northern province you have to invest. Now, the main three criteria: investment shall be done in Sri Lanka, and the second one, the investment not for the expansion of the existing business, and third one, if you have invested, you can grant enhanced capital allowances according to the percentage given in the second schedule and plus the normal capital allowances. Then go beyond that specific conditions. In that, the first condition is the based on the investment limit not exceeding 3 million but not exceed 100 million, then you are eligible to 100% enhanced capital allowance on the depreciable asset, but investment shall be done other than the northern province. That is the first thing. And the second thing is investment criteria exceeds $100 million. Now you can see the first part, it exceeds 3 million but not exceeding 100. Then it is very easy to remember for you all. Second criteria is exceeds 100 million. What is the enhanced capital allowance limit? It is 150%. 150%. again, what are the assets you should invest on this investment? Depreciable assets other than intangible asset. And again the province is the other than the northern province. If this condition has satisfied, then you are eligible to 150% of the enhanced capital allowance on depreciable asset, plus on that depreciable asset again the normal capital allowances under 4th schedule. Then the third criteria, it is exceeds $3 million. Any amount exceeds 3 million to any amount investment, then the enhanced capital allowance percentage is 200%. For what? It's depreciable asset again other than intangible asset. What is the province? In the northern province. What is the main intention? To develop the northern province. If it is so, then the investors go in there and take in this benefit, and that part of the country is going to developing. Then it's very good for investors as well as the country. Therefore, this investment incentive has the implemented in that what is the enhanced capital allowance percentage, it is 200%. If the exceeds in $3 million investment in the northern province on the depreciable assets. I think it's very clear to you all. Then the next part of the enhanced capital allowance exceeds $250 million. Exceeds $250 million. Now this is the specific enhanced capital allowance. What is this specific enhanced capital allowance? It is on assets or shares of what company? State-owned company. If your investor is willing to invest on state-owned company, then it's used in part in Sri Lanka, then enhanced capital allowance percentage is 150%. Okay. Then it is the criterias to satisfy, the specific criterias to satisfy claim enhanced capital allowances, or rather investment incentives under 2nd schedule. Now we will go for claiming of enhanced capital allowances. Before that, I need to explain this. This is applicable for 2nd schedule as well as for the 6th schedule both. Now come to this part. Think that if you have invested as per the 2nd schedule of the Act, you have invested the 3 million, the exceeding $3 million, maybe the 50 million US, other than northern province. Other than northern province, you have invested on depreciable asset, then which is you are eligible to claim the enhanced capital allowance of 100%. Now think that you have invested in 50 million US dollars other than the northern province, other than northern province, and after that the on depreciable asset, then not in the existing business, not the expansion of existing business, but in new business. Now for this 50 million thing, this is building and furniture, just visualize. In this kind of a situation, now take the first year. Think this as the 2019-20, which is your same year of assessment. What happened? Think we are having an accounting anyway. Think that there is accounting profit, then accounting profit of 1 million. Accounting profit of 1 million, and you are doing the allowables and the disallowables, and after that arriving to business income, and after that investment income. Likewise, you are going forward. Now for this depreciable asset of 50 million, what is the investment incentive? It is from this you can deduct 50 million. See the impact. You can deduct 50 million. You can deduct 50 million. I may say it's US dollars 50 million. Think that after this is LKR, after converting to LKR, think it is 500 million. I just taken for the example. Then it is 500 million of LKR. Then investment criteria are satisfied. Now we are claiming of enhanced capital allowance. Other than that, for this two, this is the enhanced capital allowance. Enhanced capital allowance. Other than this, we have normal capital allowance. Normal capital allowance. Think that for a visualizer, for that, think for this two, building for 20 years, furniture 5 years. Then think that it is the 20 million normal capital allowance calculated. Now think after claiming this two, are you all ended up with the business income or business loss? You all ended up with the business loss. Business loss. Then this business loss, there is a business loss. There is a business loss. Now Act has provided very clear guidelines on how to claim this business loss. Now the next part of the discussion is the claiming of business loss and how these the benefit of the enhanced capital allowance absorb to the future years of the organization. Okay, we will see that part. Then in that, the claiming of enhanced capital allowances. The benefit of the enhanced capital allowance shall be taken in that year and shall be deferred to a later year of assessment. What we have done, entire benefit of the enhanced capital allowances we have taken in this year, that means 2019-20. Are we comply with the provision of that? Yes. Then second is given, this shall be deferred to, after claiming this, any benefit shall be deferred to the later year of assessment. Now how this is, how we are going to defer this? By a business loss. This is 519 million if I am not mistaken. Then in that, this is talking about this, how we are brought forward this for the next financial or next year of assessments. Now that condition, how to satisfy, is very clearly given in the second schedule itself. Claiming of business losses due to enhanced capital allowances. Now you all know how it is by claiming of enhanced capital allowances, how there is a business loss. How there is a business loss, now it's understood. Now go for the how to claim the business loss due to enhanced capital allowance. Now Lamai, this is talking about only enhanced capital allowance. Then business loss, if I have really taken this due to enhanced capital allowance, what is the business loss is 499. Business loss is 499. Now for this, what are the claiming of business loss conditions? What is the normal condition to claim business loss? What is the number of years of claiming business loss, the normal business loss? It is 6 years. It is 6 years, but in this, for this enhanced capital allowances, it has given the greater time period, like first one, amount of investment and claimable period of business loss. Amount of investment US dollars 100 million on depreciable assets other than intangible asset. That means up to US dollars 1000 million up to US dollars 1000 million non depreciable assets other than intangible assets, that unrevealed loss may be deducted by that person for the purpose of calculating person's income from a business for a year of assessment in any of the succeeding 10 years. Normal business loss we can carry it forward and claim for the another 6 years, but for this it's a 10 years extension has given. Second one, more than $100 million on depreciable assets other than intangible asset, that unrevealed loss means the loss we have to claim but still we have not claimed. That unrevealed loss may be deducted by that person for the purposes of calculating the person's income from a business for a year of assessment in any of the succeeding how many years? 25 years of assessment. That benefit also given for the taxpayers. I think that entire part with the example and the explanation is very much clear to you all. Then now your examination is open book referential. If you know these things, I am not telling you all to dictate, memorize and the by heart on these things and go for the examination. Then what you all can do, take the maximum benefit out of the open book referential. If you know there is a second schedule to act, if you know there is a sixth schedule to act, if you tag that part, then anything is a grey to your mind at the examination, take a 1 second and open it and see. Not to write the entire paragraph from the act and have a theoretical answer. No, if there is anything, this US dollars 1,000 million, US dollars more than 1,000 million and US dollar 3 million and other than other, it's something complicated, maybe. Then take the maximum benefit out of the open book referential and check that part and write a very good answer. Then as I am always repeating, be a smart student at the examination. Then, but at the examination you cannot take that as the first time. First time you cannot open the book in the ever life till the 3 hours and 15 minutes of the examination you have not opened that. Then at that day, at that minute you are going to open the book, then I am sorry to say you are going to fail. Therefore, please be very much familiar with the act and take the maximum benefit of that familiarity at the examination. Then that's the end of the discussion of the second schedule. Now my main focus is to focus on the sixth schedule to the act. Sixth schedule to the act, temporary concessions. Under the temporary concessions, enhanced capital allowances. Then summarization of the sixth schedule. Now I have a question. Why this is now the second schedule? It's very clearly given enhanced capital allowance and the investment incentives. But this sixth schedule is a temporary concession. Why it is temporary concession? Yes, it is temporary. There is a reason behind that. What is the reason behind that? Why it's given as a temporary concession? These concessions are applicable only for the 3 year of assessments. How that 3 year of assessment is quantified? Based on the Act number 24 of 2017, from the day of effective of the new Act. From that another 3 years. That means the 2018-19, 19-20 and the 2021. Now we are in the year of assessment. The 2021 this started from the 1st April to 31st March 2021. Then it is the end of the temporary concession. That's why it's a temporary concession. Then why it is temporary concession? Applicable only for 3 years of assessment after implementing of the Act number 24 of 2017. 3 years quantify as 18-19, 19-20 and 2021. Now go for the main conditions like the second schedule. For the sixth schedule, main condition, first one, a person who invests in Sri Lanka should be invest in Sri Lanka and on what assets? Depreciable assets. Then second one, other than the expansion of the existing business, none of these enhanced capital allowances are given for the expansion of the existing business. You should start even under the current company or forming a new one, you should start a new business activity, new business undertaking, not the expansion of the existing one. Second one, addition to the capital allowance computed under fourth schedule, the same conditions applicable under the second schedule too, which is with the enhanced capital allowance, you can claim the normal capital allowance. Other than the enhanced capital allowance, you can claim normal capital allowance. These are the main conditions you should remember. Why these things you should remember? It is essential when you are writing your answer. When you are writing your answer, I will explain when we go for the question how it is critical for you to have this theoretical knowledge. Then again, like in the second schedule, enhanced capital allowance, for this also there are a specific condition to claim investment incentives or temporary enhanced capital allowances. What are those specific conditions? First one, investment and enhanced capital allowance limitation. Based on the limitation only, we can claim the percentage of the enhanced capital allowances. Then the first thing I am going for the category of the asset or a category of the investment. Category of the investment, building, structures and similar works of the permanent nature. Now see, compared to the second schedule, in the sixth schedule, category of the investment has restricted. Please understand these critical points. In the sixth schedule, depreciable assets is not the all depreciable asset. It has restricted for the first investment category, building, structure and in the permanent nature or the works in the permanent nature. Then what is the investment criteria? Up to $3 million. In the second schedule, we have started from exceeding $3 million. That is the main criteria that the second schedule and the sixth schedule is deviating with each other or each one. Then investment criteria, second schedule is starting exceeding $3 million. In the sixth schedule, it is starting up to $3 million. Now both investors who are going to invest below 3 million and above 3 million, two schedules given enhanced capital allowances. Two schedules are given enhanced capital allowances. Then the province other than northern province, what is the amount of enhanced capital allowance? It's 100%. Second one, it is category of the asset to invest. Now again category of asset is different. Plant or machinery that are used to improve business process or productivity and fixed to the business premises other than intangible asset. In the second category, I think all the depreciable assets covered. The plant, machinery are used to improve business process or productivity and fixed to the business premises. That means the main target is on the plant and machineries. Plant and machinery and the other the equipment fixed to the particular business premises or a permanent structure. Then the provinces, the first one is for the other than northern province, second one to the northern province. Again the investment criteria up to $3 million. What is the percentage of enhanced capital allowance? It is 200%. It is 200%. Then I think this is clear. Then claiming of enhanced capital allowance. Now Lamai, the speciality with the second schedule to sixth schedule is sixth schedule, the act is not talking about the business loss incurred due to enhanced capital allowance under sixth schedule. Why? Because it is only applicable for the 3 years of period. Only applicable for the 3 years of period. After that, that loss you cannot claim. That is why claiming of enhanced capital allowances on the sixth schedule, it is very clearly given the benefit of the enhanced capital allowance shall be taken in that year and very clearly given shall not defer to later year of assessment. Shall not defer to later year of assessment. Now I think you all having a great understanding of the second schedule and sixth schedule and the special criteria of second schedule and sixth schedule and the general criteria of the second schedule and sixth schedule, investment limitation, how the business loss going to claim, and all these step by step knowledge you have gathered now. Then our next step is to application of theoretical knowledge to given question under taxation and business decision making. In that, our main focus is now pilot paper question 3 part B. In the pilot paper question 3, which is in the Pinnacle PLC, if you remember the last session we have done that, then Pinnacle PLC, I need to again just to highlight to you the pre-seen information again. The pre-seen information again. In the pre-seen information, analysis of pre-seen, for you to remember, because there should be a link between that question to this, no, then this is for you to have a refresh your knowledge. In that, name of the company Pinnacle PLC, as you all know, then 3 divisions in the company. The very important to know about the existing business activity of the organization is very critical. In that, there are 3 divisions. One is Wellburn division, second one is Solar Electro division, and the third one is the Machine Tech division. In that, Wellburn division in the existing for 35 years and create powerful diesel engine. What's their main business activity? Manufacturing of diesel engines for boats, trucks and the commercial farming equipment. That's the first division, manufacturing of diesel engines. And the second division is Solar Electro division. In that division, the Solar Electro was recently acquired from the high-tech manufacturing firm Solar Electro produces again manufacturing of Solar Electro, the solar power engines to the maybe for the corporate market, maybe local and export both markets. Then Machine Tech division, which is in the repair in the operation. Then principal business activity, if I have summarized again, manufacturing of solar power engines, diesel engines to local and export market and providing of machine service and repair operation. This is the principal business activity. Why I have taken this again? Because this is really important to start as a starting point of our the question in the pilot paper question 3 in the pilot paper question 3. Okay. Then if you have again, if we have again go for the our question, if you have again go for the question, pilot paper question 3 part B, see the examiner has asked variety of question to 3 marks, 4 marks particular range. Okay. In that part B of the question we are in. What is the examiner requirement? Advise the senior management of Pinnacle PLC on the possible tax benefits, including tax exemptions, qualifying payments and other tax benefits available under the provisions of Inland Revenue Act number 24 of 2017 on each of the following proposals. Now see, as I have explained, examiner has provided the proposals to you. You have to evaluate the proposal and advise to whom? The management of Pinnacle PLC. Write a report to communicate to the management of the Pinnacle PLC given on the particular scenarios. In that, we will first go for the question and we will then go for the answer discussion. Then, in that, the first scenario, now again I need to summarize the question. In the question, it has asked on the possible tax benefits, including tax exemptions, qualifying payments and other tax benefits under the Act. You have to provide a wide answer with the inclusion of all these exemptions, qualifying payments if applicable with the related provisions. Now I go for the first part of the question. It's for the 3 marks. In that, Roman 1, open a new branch. Now you have to advise on open a new branch under Pinnacle PLC for the manufacturing of solar engines by investing $3 million on depreciable assets used in the high-tech plant established in the northern province of Sri Lanka and transfer existing operations of solar electro division with its assets. Now see, we have to analyze this proposal for the 3 marks. It's for the 3 marks given. Now open a new branch. Okay, understood. Under Pinnacle PLC, under same company name, understood. For what? For manufacturing of solar engines. Is it a new business or existing business? They are going to expand their existing business. Keep it aside, okay. Then invest in $3 million. Invest in $3 million mean, is it applicable for the 2nd schedule or 6th schedule? 6th schedule. Why? The 2nd schedule is starting exceeding $3 million. The 6th schedule is starting up to $3 million. Then obviously it should come to your head, okay, I have to apply what schedule? 6th schedule. If it is so, it is for what? Temporary concessions. If it is for temporary concession, what is the number of years we can claim? 18, 19, 19, 20 and 2021. These things should be come to your mind. And on depreciable assets is given. Then used in the high-tech plant established in the northern province, okay, in the northern province. Now if it is going to invest in the northern province, what is the enhanced capital allowance if applicable? Is the 200%. It's a 200% if applicable. We don't know, but for reading the information we cannot apply that because it's going to expand their existing business in the northern province of Sri Lanka and transfer existing operation of solar electro division with this asset. Now for this new branch, we are going to transfer our all solar electro division to that new branch. That is the scenario provided to you for the 3 marks. If it is 3 marks, maximum time you have to spend 5.4 minutes. 5.4 minutes. Now, we will go for the analysis of the answer one by one. What is your action verb? Action verb under tier 5. Which is tier 5 is evaluate, which is the higher position in your action verbs. Then under that action verb is advise. To advise, what is the meaning of advise? Offer suggestions about the best course of action in manner suited to the recipient. maybe your corporate client, maybe your individual client is the recipient. In that sense, in that recipient, what you all going to give, it is the best course of action. It is best course of action you have to give. Now for the entire question, now I have only read the Roman one of the question, but in that there are the 6 parts of the question. In that total time allocation, total marks for that question is a 16 marks. For 16 marks, what is the maximum time allocation? It's 28.8 minutes. If you can take 30 minutes and complete, it's good, but I am not telling you to even take the 30 minutes, even at the correct time, please finish off the answer. Then what is your position? I am tax consultant. I am the tax consultant. Okay. Now, in that we will go for the answer. We will go for the answer again with the question. Again with the question, I have separately taken the question for your reference. Roman 1, open a new branch under Pinnacle PLC, the red color, for manufacturing of solar engines. By investing $3 million on depreciable asset used in the high-tech plant established in northern province of Sri Lanka and transfer existing operation of solar electro division with its assets. Again, before answering the question, I need all of you to follow the answer format. Why? Before answering the question, as the student, you should have answer format in your mind. How I am going to write the answer. Then like I have done for the other narrative parts of the question, like in the value added tax, again I am providing the answer format to you. I am not telling you all to strictly follow this answer format, but as per your background, as per the volume, please have answer format before you go for the answer. The format is very important. You cannot just write answer. Then it should be a flow. It should be a flow. And this is you are providing a tax consultation advice. Therefore, it should be a methodical manner. In that, if it is of first thing, I am writing the theoretical. This is answer format. Answer format. In that, first thing I need to understand whether this is from the 2nd schedule or 6th schedule. Then I have understood because of the $3 million investment, this is for the 6th schedule to the act. Therefore, I am applying the theoretical part of the 6th schedule. First one, the explain of the theory under 6th schedule. That means as per the 6th schedule to the Inland Revenue Act number 24 of 2017, for if any person invests in Sri Lanka other than the expansion of existing business, he or that particular person can have a enhanced capital allowance under temporary concession other than the normal capital allowance. That thing you have to write first. Second one, the application of scenario. Now we don't know, in the scenario it has given, okay, I am going to invest $3 million in the northern province. Likewise, the scenario has given. Then you need to application of the scenario to your next paragraph by telling, as per the information provided, the Pinnacle PLC is going to do these things. Third one, the again application of theory or a legal provision, I may say application of legal provision, to given scenario, scenario. This is very, very important. You are getting more marks for this part. You are getting more marks for this part. Now fourth one, based on this application, you have to give a advice whether the company is eligible for enhanced capital allowance under temporary concession or not eligible Done. This is the answer format. Is this difficult? No. If you practice, this is the most easiest way for you to pass the examination. I am only providing a guide for you all. If you accept this, you can go by this. If not, you can have your own answer format. And anyway, now you should have an answer format. That's the final conclusion. Okay. Then we will go for the answer. Now we will apply for this one. Then we are writing as per the 6th schedule. What is the 6th schedule? Temporary concessions of the Inland Revenue Act number 24 of 2017. A person who invests in Sri Lanka other than expansion of existing business on depreciable asset as prescribed in this schedule. That's why I have included in my answer as prescribed in this schedule. Why? In one investment criteria, it has given only building and permanent nature of structures. Other one, it has given plant and machineries fixed to the business premises. That's why it has given as prescribed in the schedule. During the year of assessment shall be granted enhanced capital allowance computed in accordance with this schedule in addition to the capital allowances computed under 4th schedule. Now as a student, I am very much clear to the examiner by telling that, okay, I know what you have asked. That's the first part, which is theory under 6th schedule. First you have understood I have to apply 6th schedule and I have given the extract, the theoretical part, the enhanced capital allowance under the 6th schedule. Now in that I have given application of theory provision by understanding relevant schedule. You should need to understand the particular correct section. Then that's the first one, theory. Then second one of the answer, in this scenario. Now what's the second application of the scenario? In this scenario, Pinnacle PLC has opened the new branch in northern province of Sri Lanka for manufacturing of solar engine by investing $3 million on depreciable asset. From where I have taken? I have taken this from the unseen or a question. If you should read the question very carefully, answer is with your question, answer is in your question. Then however, the company's existing business includes manufacturing of solar engine. How am I told like that? Because in the preceding information very clearly given, the company is in the produce of the solar engines. Then application of information given in the question. Did I do that? Yes, I have done that. Then this is actually a repetition of the question. And the third one is very, very important, application of legal provision to given scenario. Therefore, open a new branch to expand its what business? Existing business of manufacturing of the same product in another province, in northern province, does not permit requirement of enhanced capital allowance of 200% on depreciable asset. How can I quote this 200%? Why it is application of theory under 6th schedule? If $3 million in northern province for the high-tech plant and machineries, what is my enhanced capital allowance? 200%. Then as per the 6th schedule of Inland Revenue Act number 24 of 2017, what is recommendation based on the theory and information given in the question? I have linked this 3 plus 4 both. I think you have got the point. You should have a typical answer format when you are writing the answer. See, the examiner is very delighted about you, very happy about you if you have wrote the answer like this. Then I have put another point. However, capital allowance as per section 16 and 4 schedule to the act can be granted based on the class of the asset and based on the number of years. It's additional point to a student. Why I have included that? Now the examiner is asking the tax implication based on the act, qualifying payments, exemptions and all. Then why don't you write this point? You should tell the examiner, I know these things, okay, in that company cannot apply enhanced capital allowance under 6th schedule, but you must tell, don't worry, you can apply under the capital allowance under 4th schedule. This given you the additional mark. I may say again, this is the PW paragraph, again I am telling it's a price winners paragraph. If you need to go for that level, please have this kind of a solid answer. I think first part of the question is clear to you. For 3 marks, this is more than enough for you. Okay, now we will go for the second question. I will go with this second Roman 2. Again, our main thing is to provide the advice. Don't forget that we have to provide the advice. Then the second question is again for 3 marks. That means for 3 marks maximum time 5.4 minutes. We will see how you are going to write the solid answer. In that, open a new branch under the Pinnacle PLC for manufacturing of solar engine for both foreign and local markets. Stop there and analyze the question. What they are going to do again? Open a new branch. Is that clear? Yes. Under what? In the existing company name. For manufacturing of again what? Solar engine. Now their market segment has changed. What is that? Foreign and local market. Both. By making investment of $3 million on depreciable asset in high-tech plant. Again high-tech plant, $3 million in Northern province. Now this section is very much familiar to you all. Again, if it is possible, Pinnacle PLC can take the enhanced capital allowance of 200%. Why? It's 3 million in the Northern province invest in the high-tech plant with reference to in the business process. However, it did not transfer any of its existing solar electro division resources. Now examiner has given a clue, okay, under the Pinnacle PLC we are going to do these things, but we are having existing solar electro division. We don't have any link between this existing solar electro division to new one. Why it has given? Too complicated your mind. And now we all think, okay, they are not going to transfer their existing business. This is a new one. Then therefore we can apply 200%. No, don't think like that. Because again under the Pinnacle PLC, even there in the first example, the first question, they are going to transfer. Now particular the scenarios has given to you to test your thinking. This is obviously how you think. Then in the first question it has given existing business, entire existing business is going to the solar engine existing business transfer to Northern province. But in the Roman 2, the second part of the question it has given did not transfer the existing business. Then if it is did not transfer, now we all know, okay, they are going to open up a new one, everything is new. Yes, everything is new other than the business activity. Even under the new branch in the Northern province, they are going to continue the same business. And again it is expansion of the existing business in another geographical area. That's the only point. Did you understand that? Think. Did you understand that? If you have understood that, then no harm, the entire 3 marks you can grant. Now I am again going to my answer format. Now under this question, my one of the main focus is to familiar you again, because I need you to write a solid answer. Now your most favorite question on company taxation we have done. It's a calculation. Then other than that, all the questions are you to write. Then we will go for next part, how you all apply the theoretical part to the given scenario. Again I am repeating the same. As per the 6th schedule temporary concessions of the IR Act number 24 of 2017, a person who invests in Sri Lanka other than expansion of the existing business, okay, on depreciable asset as prescribed during the year of assessment shall granted enhanced capital allowance computed in accordance with this schedule in addition to the capital allowances computed under 4th schedule. Again in the second one also the application of theory to the given question. This is the, I have understood what is the schedule and how to going forward. Second para, now application to the given scenario. In this scenario, Pinnacle PLC has opened a new branch under the existing business name, under the Pinnacle PLC, for the manufacturing of what? Solar engines. Is that a new product by the Pinnacle or a same product? It is the same product what they are doing currently. By making investment of $3 million on depreciable assets in the high-tech plant established in northern province of Sri Lanka. Now what I have done? Repetition of the question. The question information I have applied to my answer. Application of information given in the question. Now my recommendation and the advice in that I have to tell very clearly, although most of the conditions which are applicable for temporary concessions of enhanced capital allowance of 200%. Now all the students, you all know why it's 200%. It's go for the northern province, $3 million on the high-tech plant or a business, the machinery is used for the business process. Then the 200% is specified under item 1, the para 3 of the 6th schedule of IR Act number 24 of 2017. For you to have a greater understanding, I have, and the developer has included this para reference, but at the examination, if you cannot remember these things, don't go that far, but if you can, please apply. If you can remember, please write on the dot answer. If not, you can refer the schedule and go forward. And have been fulfilled. Company is not, I am starting with although these conditions are fulfilled, company is not entitled to benefit of additional 200% enhanced capital allowance. Then why I am justifying my answer? Since Pinnacle PLC has done only an what? Expansion of existing business to continue existing solar engine manufacturing business, merely changing a what? Geographical area of the factory. This is the recommendation. Application of legal provision to given scenario and advice, the second part also I have done. Recommendation based on the theory and information given in the question. The last, however, capital allowance as per section 16 and 4th schedule to Act can be granted based on the class of the asset and based on number of years. This is additional point to show your colors to the examiner. I think the part 2 also clear to you. Then the question 3, Roman 3, the next possible option which is given by the examiner. Form a new subsidiary company. Now for the first scenario and the second scenario, all are under Pinnacle PLC name, under the umbrella of the Pinnacle PLC. But here they are going to form a new subsidiary. We will see what under that situation what we have to do. Form a new subsidiary company fully owned by Pinnacle PLC for manufacturing of solar engine by making investment of $3 million on depreciable asset in the high-tech plant established in northern province of Sri Lanka. Now see the last one. And transfer all the operations of solar electro division with assets and liabilities of the market value. Now you have to think little bit. I have analyzed the question for you. That even this is 3 marks. You have to take a lot of knowledge from these questions. Then the first thing, what are the arrangements? What are the things they are going to do? The first one, this is not actually the part of the answer, but I need as a help to you all, and for much convenient to you all, we have done this, which is analysis of the given information. In this scenario, the transaction occurred could be listed as follows. Analysis of given information. Before the writing answer, you should have do this. If you did that only, you can gain a good answer points. Then A, formation of a fully owned subsidiary company by Pinnacle PLC in the northern province to carry out its existing business. I have put that carry out it what business? Existing business. What is their existing business? Operate in a solar electro division. If you have understood that point, the other information is easy for you all. Second one, making an investment of $3 million, okay, by Pinnacle PLC to subsidiary company on depreciable asset. What is the amount of investment? 3 million. Who is going to invest on this subsidiary? Pinnacle PLC on what? Depreciable asset. What are the kinds of depreciable asset is given in the question? High-tech plant established in the northern province. Why I am going for this question format? That means I am asking question and I am giving the answer. You should do that. Answer the question from you, okay, given the question for me again. Then it is very clear for you to understand the question. Don't read the question just sake of reading. At the examination, you don't have to time just reading, okay, I am reading this. I am not telling you to read very quickly, but read effectively. If it is taken 8 minutes, it doesn't matter, but you have read it effectively. If it is so, even within 3-5 minutes, you can write the good answer. Then, making an investment of $3 million by Pinnacle PLC to the subsidiary company on the depreciable asset. The kind of the depreciable asset is given, investment is given, geographical area is given, northern province. Then why this information is needed? Because why important? Because you have to decide what is the amount of capital allowance under enhanced capital allowances. What is the amount of capital allowance under enhanced capital allowance? It is 200%. That's for the analysis of question under part, this is under point B. To you to understand what is the amount of investment under enhanced capital allowances, which is 200%. Part C, transferring of the entire operation of solar electro division of the Pinnacle PLC with assets and liability of for market value of the subsidiary. Very, very important, very new point you to think. transferring of depreciable asset to one business to another business. Now there is a Pinnacle PLC. From the Pinnacle PLC, they are transferring the asset to new subsidiary at market value. Is it correct? Yes. Market value mean, now I am going for the transfer pricing part also. In here, there is a Pinnacle PLC, which is a main company or a parent company, and there is a subsidiary. The parent is transferring the assets, depreciable assets of the one division to market value. Is it at the cost? No. Is it at the written down value? No. It is at the market value. That means, is it arm's length or not? It is arm's length. Then total, the transaction where they have done, it's correct. It's no any issue. It's correct. But to take the enhanced capital allowance, the arrangement what they have done is not enough, because they are carrying out its existing business. We will go for the answer. I think I have much explained the question, the scenario based to you. Now we will go for the answer. As per the 6th schedule, temporary concession of the Inland Revenue Act number 24 of 2017, a person who invests in Sri Lanka, the same paragraph continue. This is for application of theory provision by understanding specific the schedule. Now, third question also we have done that. Now, we will go for application of information given in the scenario to your answer. Although Pinnacle PLC has formed a new subsidiary company, and also most of the conditions which are applicable for temporary concessions of enhanced capital allowance of 200%. Are you all agree with me? Is that 200%? Yes. Why? It is the investment US dollars 3 million, investment in high-tech plants attached to business premises, and investment in where? Northern province. Okay, it's clear. Then 200% is specified under item number 1, 3 of the 6th schedule of IR Act number 24 of 2017 have been fulfilled. Company is not entitled. I have started, although even the company has done all of these things, but there is an issue. What is the issue? Company is not entitled for benefit of additional 200% enhanced capital allowance since Pinnacle PLC, what they have done, only formed a new subsidiary company as expansion of existing product of what? Solar engine manufacturing business, merely change in ownership of manufacturing process and geographical area of the factory. What's the meaning of that para? Application of legal provision or a legislative provision to given scenario. Done that. Basically you are getting the most of the highest marks for this. Your justification as the consultant, you must justify your suggestion. Then you have to do that in this manner at the examination. Geographical area of the factory of the business, arrangement to obtain tax concession. They have done all. This is a arrangement, all the step by step they have done to obtain the tax concession. Now, this part is application of information given to the question with the recommendation. Now, go for next part. Further, by studying the above series of transactions, it is clear that it represents an arrangement by Pinnacle PLC to enjoy the enhanced capital allowance under item 1.3 of 6th schedule of the IR Act number 24 of 2017. This is additional point by the student. Why? Again, you can, now the examiner is asking tax exemptions, the qualifying payments, and the other provisions of the Act. Then why don't you show these things to the examiner? Now, we are having the section 35 tax avoidance scheme. If a person intentionally make a scheme or arrangement to reduce or avoid the tax burden from that person, then it is prohibited in the Act. Then that part we have included for you. This is the arrangement, but a failure of the arrangement, they are not in a position to claim the enhanced capital allowance because they are continuing their existing business of the manufacturing of solar power. Then next one, again additional explanation to the student. However, since Pinnacle PLC has transferred all the operations of solar electro division with assets and liability to new company for market value, the new subsidiary company is entitled for claim the normal capital allowance available under section 16 of the Act on the cost of such assets considering market value. That's mean now I am talking about the subsidiary of the Pinnacle PLC, which is new subsidiary. Now subsidiary is going to even start the business, they have to purchase the depreciable assets from the open market. Rather than purchasing it from the open market, they have brought that from their parent company. At what value? Market value. Then no difference. In the market value they have claimed, but if I have taken for the open market, it may be brand new, maybe these are used assets, but for that used assets even in the market value. Then market value of the assets for subsidiary, it's my cost of the fixed asset, we can claim capital, normal capital allowances. These two paragraphs for you to understand more about the question and the step by step process what the company has done, and this is typically for a good student to earn more marks. Okay. Then we have done the Roman 3 also. Now we will go for the next part of the question. In that, from a new subsidiary company, the Roman 4 of the question, read with me. From a new subsidiary company which is fully owned by Pinnacle PLC for manufacturing of wind power electricity generating turbines for both foreign and local market by making investment in $3 million on depreciable asset in high-tech plant established in northern province of Sri Lanka. Now, when doing Roman 1, 2 and 3, the 3 different scenarios, now you all know how to take 200%, what are the points to be understand and under the special investment criteria and normal criteria under the schedule 6, all now you all familiarized. Now here, analyze the question very carefully. They are going to form what? New subsidiary. Again under the main parent company is Pinnacle PLC. What is their business? Manufacturing of wind power electricity generating turbines. Then, does we did that previously as the Pinnacle PLC? We haven't. This is first time we are touch on our hands on the manufacturing of wind power electricity generating project or the turbines for the both foreign and local market. Now you can understand, is this a expansion of the existing business? No, this is going for a new business activity. Keep it in your mind. Making investment of $3 million on the depreciable asset in the high-tech plant established in the northern province of Sri Lanka. Again $3 million investment in high-tech plant, northern province. What is the percentage of enhanced capital allowance if applicable? It is 200%. Now we will go for the answer. We have analyzed the question. Now we have to go for the answer. Again the same part, first para is the application of Schedule 6. As per the 6th schedule, temporary concessions of the Inland Revenue Act number 24 of 2017, a person who invests in Sri Lanka, and all the story going like that. I am not going to read that para again. This is again theory under the 6th schedule. Even the 4th one we have applied that. Then second one, application of theory to given scenario. Read this very carefully. In this scenario, Pinnacle PLC has formed fully owned subsidiary company to manufacture what the product? Wind power electric generating turbines for both foreign and local market in the geographical area of Northern Province, making investment of $3 million on depreciable assets to fulfill the conditions applicable for temporary concessions of enhanced capital allowance 200% is specified in item number 3 subpara item number 1 subpara 3 of the 6th schedule of Inland Revenue Act. This is entirely the repetition of the question. Repetition of the question, we are telling to the examiner, the company, my client has done this. Now your opinion, what's your opinion? In this context, Pinnacle PLC has formed a new subsidiary company as a separate entity. Did you understand that? To manufacture of new product, which is manufacture of wind power electric generating turbines, which is a new business activity. Did you understand that? Activity for Pinnacle PLC Group by meeting all the requirements of legislator as specified under the item number 1(3) of 6th schedule of the IR Act. Further elaboration of the answer with what they have done, apply to the 6th schedule of the Act. Apply to the 6th schedule of the Act we have done. Then now the enhanced recommendation, since Pinnacle PLC has formed a new subsidiary company to manufacture of wind power engine electric generating turbines, which are totally a new business. Why these points bold? Why these points highlighted? Because your answer, you must write these things. If the examiner has seen these points in your answer, then you are eligible to receive that particular, the relevant, the total full marks. That's why the key points highlighted and the bold, italic or everything done for you to understand it very clearly. Manufacture of wind power electric generating turbines, which is totally a new business established in the geographical area of Northern Province, making investment of $3 million on depreciable asset and also meeting all the conditions which are applicable for temporary concessions of enhanced capital allowance of 200% is specified in the 6th schedule. A new subsidiary company is entitled for benefit of additional 200% enhanced capital allowance. I think among the all 4 questions, this is the first one we have given our concern. Yes, this company can apply the 200% of the enhanced capital allowance. If I again repeat my answer format, theory under 6th schedule done very carefully, application of scenario done, application of the legislative provision to the scenario and my advice done. This is the number of paras. If this, now see, in my answer format there are 4 paras, in my answer also there are 4 or 3 paras. By going forward, please have a very good answer points as the write in a necessary critical points. Don't write unnecessary things in your answer. No marks given. Then write critical point absorbed to the given question. Then next one is the 5th one, which is for the 4 marks given. Now all 1 to 4, it's 3 marks. That's mean the 3 into 4 is the 12 marks. This is the last part of your question, which is given 4 marks altogether, 16 marks for you at the examination. Be ready for this kind of a question, including the question types which I have explained in the before coming to the pilot paper. Now go for part 5 of the question. Incorporate new company isolated from Pinnacle PLC. Now under given 4 scenarios, it's a wholly owned subsidiaries of Pinnacle PLC. Even we have started the new subsidiary, it is a wholly owned thing from the Pinnacle PLC. But here this is incorporate a new company, separate company from Pinnacle PLC for manufacturing of solar engine by making investment of 3 million on depreciable asset in the high-tech plant established in northern province of Sri Lanka and sell the operations of solar electro division with assets and liability for market value by calculating value for brand name and the goodwill. Now what happened? The very different scenario. We will analyze the question one by one. They are going to incorporate new company. Done, understood. Second one, it does not have any connection with Pinnacle PLC. Why I have told like that? Because in the question given, isolated from Pinnacle PLC. Then it's a separate business undertaking. Okay, for manufacturing of what? Solar engine. Now do you have to think about, okay, Pinnacle PLC is doing manufacturing of solar engine, now new company also going to do that, it's expansion of the existing business? No, don't think like that. Think freshly, because this is new business, they are going to do the manufacturing of solar engine. They don't have any connection with our Pinnacle PLC. Then what is my investment? 3 million on what? High depreciable asset on high-tech plant, and how they take their machineries. Are they going to buy it from the open market? No, they are going to buy it from the established in Northern Province Sri Lanka, sell the operations of solar electro division with assets and liability for market value by calculating value for brand name and goodwill. They are going to take these from the Pinnacle PLC. Now the information in the question we have analyzed. Now I am again going for the analysis of the question. In this context, Pinnacle PLC does not have any ownership. That's the first thing you have to understand. Of the new company which is in the geographical area of Northern Province. It is a separate entity from Pinnacle PLC group which brought over the existing business of manufacturing of solar engine from Pinnacle PLC. They are buying the all necessary equipments and the goodwill and all these things they are buying from the Pinnacle PLC, but the new company does not have any relationship with the Pinnacle PLC. Then regarding newly formed isolated company manufacturing of solar engine by making investment of $3 million of depreciable asset in the geographical area of Northern Province is totally a new business and running using the existing brand name which is purchased from the existing owner of the business. Again, the repetition of the question, adding your views to the answer. Now my recommendation, accordingly, based on all the information provided, newly formed company started totally a new business. Please understand these points, these are very critical. Which established in the geographical area of Northern Province, making investment of $3 million on depreciable assets and also meeting all the conditions which are applicable for temporary concession of enhanced capital allowance 200% is specified under 6th schedule to IR Act and entitled for benefit of additional 200% enhanced capital allowance. I think this is different to the 4 questions we have discussed. Now examiner has given 5 different scenarios to you to think differently in the each scenario. This is now what is the tackling point for you to, what is the missing point if you are as a student, if you just read it, what you are missing, you are thinking that they are taking assets from the Pinnacle PLC, then they have a relationship with that continuing the existing business, so we cannot, but it's incorrect. Analyze the question very carefully with the given information with a light manner. Then you can see all the points you have to write in the question. Even they have brought the existing business of the Pinnacle PLC, it's a separate business, a separate company, separate undertaking, not have any business activity previously. They are new business, they went to the northern province, established a company, and they have take off the Pinnacle PLC, that particular engine division, solar engine division. That's all the nature of the transaction. By doing so, you cannot say they are not entitled to take the 200% of the enhanced capital allowance because they have obtained the purchase the existing business. It's an invalid point. You have to look at in this in a very clear manner. Even they have brought the existing business, that business and this company does not have any relationship. That should be in your answer. Then that red color paragraph is very, very important. This is a recommendation with application of the scenario, and since new company has purchased all the operations of solar electro division with assets and liability for the market value, making the payment for brand name and goodwill in addition to the enhanced capital allowance, the new company is entitled to claim in the normal capital allowance under section 16 of the Act on the cost of such assets considering market value but excluding goodwill. Can you remember in the class 5 of the assets, intangible asset, it's very clearly given intangible asset. If we can provide capital allowances based on their actual useful lifetime. If the actual useful lifetime has not provided, then we need to go for a number of years as 20, but other than goodwill. I think this is a really a good question for the 16 marks. It's an eye-opener question for you all on the taxation and business decision making. Then if I have going for the questions again in the paper, we have done the pilot paper question 3 part B for the 16 marks. Then there are 5 subs questions, each in the 3 marks of 4 questions, and the last one for the 5 marks we have done and completed. Please successfully attempt to these questions and write your answer. I am recommending you all to write the answer. Patrice, at the examination you cannot think and write if you don't have a Patrice. Please Patrice and write the answer. Have a good answer format like this. In my every question, if it is a writing part for the students as a help for them, I have given answer format and I have aligned my answers according to this format, step by step. Then your answer down. Now you can see these answers are very clear to even a person who don't know about the taxation. Please do that and Patrice and write your answers to you to take more marks. Now we will go for the last part of the session, which is the what you have learned from this session. What you have learned from this session, key learning point from the question, the pilot paper question 3 part B. In that, first one is the identify the application of enhanced capital allowances as per 6th schedule to act. Are you comfortable with that? I think yes, because we have highly analyzed the 6th schedule, which is temporary concessions, theoretical part plus application in the high level. Then second one, theoretical understanding of 2nd schedule to act. With the 6th schedule, the 2nd schedule I have done separately, together the theoretical part and how it different with the 6th schedule we have done. Then that understanding also you have received. Then understand how to analyze the question. Step by step we have read the question, we have analyzed the key points of the question. Fourth one, providing what we have done up to now. It is the providing of tax opinion, decision on given patrical scenario. Is this hypothetical assumptions? Is these are rocket science? No, nothing. These are in the patrical situation we are facing day to day in our life. Then decision on given patrical scenario by applying the provisions of the IR Act number 24 of 2017. Then last point, how to write a solid answer for examiner's requirement. Then the main outcome should be the reading the question well, analyze the question and write a good answer. If you, I think with this session, it is have completely, it has done complete job with you all for you to write a solid answer for the narrative part for the 3 marks 4 question and the 4 marks 1 question. Then going forward in the pilot paper, the same way is there because you have to write more in your actual exam as well as this you have to write more. I think with this the pilot paper question 3 part B you have gathered a high level of knowledge of application of the theoretical provisions of the Inland Revenue Act under the syllabus area of the taxation and business decision making at the syllabus weightage of 10% under the SL3 corporate taxation under 2020 curriculum. Then please go through this question as well as in the previously I have highlighted, go for December 2018, June 2019 and the December 2019 question 3, the relevant parts of this business decision making. Then Patrice, write the question, read the questions very carefully and try to get the maximum marks out of this. I think the revision session on this webinar series on the taxation and business decision making was very much helpful to you all. Then this is the end of the session and we will meet with another session to have a discussion like this. Thank you.